The markets are cooling, at least on the surface, but under the hood, momentum is quietly shifting. Volatility continues to drift lower. The door flirts with the bottom, and yields. They are forming a ladder that could mark the next bounce. Commodities are sending mixed signals. Gold is stalling, oil just dropped the bombshell, and natural gas is so oversold it's flashing bounce risk. Meanwhile, the SP 500 and Nasdaq are drawing clear lines between short-term pullbacks and powerful long-term trends. And yes, Nasdaq just printed a fresh all-time high, those bearish paths slipping fast. Let's explore the waves that matter midweek and see what the signals are really saying. This is daily market waves, where we don't chase noise, we chart the charts. And we start, as usual, with the volatility index. So today's closure of the index itself and its futures have been bearish. Clearly bearish continuation candle, a freshly made 50 by 100 days bearish cross that happened yesterday. Today it's been confirmed. And on the futures, we see that the second candle is closing below the 200 days moving average. Technically, everything is bearish until we see a reversal. If we look at the slightly bigger frame, well, everything is bearish here either. So the 2-day frame, which closed today, also a bearish candle, most likely confirming a bearish reversal here, a tower top here, and the chances for a lower low on the plate. If you watched our videos on the weekend, our digest, and also follow our daily analysis, recent daily analysis on the volatility, you would know that there is a very clear classical structure being built. So far, I have no concerns following it. Most likely it will complete in a couple of days and we would be looking for the next powerful move. So now let's talk about the dollar. What we are seeing here, this is a very interesting proposition here. So this is the level 97.707. If the dollar index closes below this level today in 1 hour, it will be a bearish continuation and we would be looking for more lower lows. However, if it closes above, well, that would be a bullish formation, potentially a reversal. It wouldn't reject the possibility of making a lower low. However, the odds would be bullish at this moment. And just to confirm this hypothesis, we have a 5-day frame bullish engulfing. And we know that the next 5 days would be interesting. So there is still a chance of a strong move upward. Well, until tomorrow. Tomorrow looks like it's going to be a key day for this one. And for the weekly frame, it's also an interesting composition of candles. We have a bullish harami here. And we know that harami often accompanied by a lower low following the harami, and after that we see a reversal. Well, let's see what happens in the next couple of days. So the day tomorrow will be extremely important, and the weekly closure as well. If we look at the chart, so this is the chart that we've been tracking since March, I believe. Yes, since the end of March. 1, 2, 3, 4, 5. The red count became the primary, and now we are tracking it for a completion. So potentially an impulsive wave, and the wave 5 is being a diagonal. The question is how it ends. So this is the one that I've been tracking until now, until today, but it's an interesting point. So this is an potential extending diagonal. However, after today's move, I was thinking about another perspective, and this is something that I would like to share. So this is the previous count. So far, it can be complete And if we consider this wave from up as a diagonal, then this move down technically explains it. And in this case, we would be looking for 1, 2, wave 3, 4, 5, and so on. So the question is, and the critical question is, the cross of this line. So if dollar makes a new lower low, then this potential would be invalidated, obviously, and we would be looking for a bigger diagonal. So this would be wave 1, this would be wave 2, wave 3 here, wave 4, and potentially wave 5. So in our case, and I already charted this potential diagonal here. So let me remove this potential impulse so it's not confusing here. And now let's talk about this diagonal. So this is a very interesting formation. So first of all, this wave 3 is shorter than wave 1. And for dollar to keep this diagonal, it needs to reverse above this level, 96.8483. If it doesn't, if it makes a lower low here, well, then this formation will be invalidated. This hypothesis needs to be reworked. And ideally, I would say maybe a very sharp and clear move here above the boundary. I mean, below the boundary in our case. Very quick reversal and a flight upward here. Well, this would be an ideal case for this particular diagonal. So I would like to say that this wave is not impulsive anymore. Or the previous waves were impulsive. So like this one, for example, it's clear impulse 1, 2, 3, 4, 5, but this one is not. And that's why the hypothesis for the diagonal supported by multiple technical elements is here. So if we see a move somewhere here and something like this and a clear move upward, then the diagonal is complete and we should see an immediate return about towards 101.5, 102, or maybe higher. Well, that's the perspective for dollar. Let's see what happens in the next couple of days. Now let's talk about the bond market. It closed today with very interesting combinations. First of all, I'd like to say that the 10-year yield formed a ladder bottom right on the 200 days moving average. So there is a very good chance we see a bounce tomorrow. And well, this candle is very vulnerable. Even a small green candle would be very bullish engulfing and lead to a reversal. On the weekly frame, this is the chart that we've been tracking for multiple weeks already, if not months. And now we see a green candle, very strong bullish engulfing, and the consolidation for several months, 3 months already. Now I think it's time to get a reversal. Let's see what happens in the next couple of weeks. And the monthly frame so far, I said that even if it pulls back down with a red candle, it doesn't mean it is going to be bearish. So far, it is just hanging on the boundary line. So closure like this would be still bullish, but we still have 5 days to go. Now let's talk about TLT. TLT today also formed an interesting combo. This technically, I thought it's going to be a bullish one, but unfortunately it failed to make a new all-time high when formed an inside candle. Most likely it is going to be bearish. We might see a pullback. And on the weekly frame, unfortunately, we don't have any momentum readings today. So this is the weekly incomplete candle. 4 weeks in a row, TLT failed to make a move and now it still has a chance. So 2 more days and we might see a strong move upward. However, if it fails to make a new higher high, well, that would be bearish. And for the monthly frame, so far it is bearish, and we will discuss multiple perspectives from longer and larger frames in our weekly digest and in our weekly reports. And the final is TLT Elliott Wave, and I would like to say this most likely a flag, because this wave is no way, it is impulsive, it is a corrective structure developing multiple corrective waves here. I can see potential on A, B, C, wave C being an ending diagonal, and I'm talking about this possible path here. So this is like wave A, this is wave B, and this is wave C, and wave C possibly ending diagonal like this. So let's see what happens. So far, any count has been corrective, and I would be looking for a flag to complete one way or the other. Well, that's the chart we've been tracking for almost a month. Now let's talk about commodities. Let's see what gold prepared us today. So far gold has been bearish, and if you followed our updates on the weekly in the weekly reports, on the weekly digest, you would know what kind of structure we are tracking right now. So far, this candle today was a consolidation one, and in order to make a bullish, gold would require a lot of effort and a lot of rally. So far, it is sitting on the 50 days moving average, and I think that if it breaks this 50-day moving average, which has been support line for over a year and even longer, so let's see what happens next. I think that gold has a chance to break it, and if we look at the bigger frame, for example, like a 3-day frame, I have multiple instruments like gold XAY, XAU, and gold futures, just to track, making sure the accuracy of it. So on the 3-day frame, we have a clear bearish closure here on the futures and on gold. So if we see a weekly frame, the weekly frame is still, it's bearish neutral, and it needs a confirmation. Technically, it needs to close below this level, below this green candle low. If it closes this week, that would be kind of disastrous event for gold, and we will be tracking it and discussing it later. But now, from the momentum perspective, that's the most concerning part at this point. 3-day frame, we've been tracking MACD bearish cross, and now we have a freshly made 5-day MACD bearish cross. I think that the weekly would be the next one. Yep, and it's already happening. So we have a marginal break, marginal cross on the weekly frame, and if it holds like this, well, it won't be pretty event. So let's see what happens on Friday. So just get prepared for potential reversal in gold. Now let's talk about the Elliott Waves. These are the two waves that we've been tracking recently, and I think that it is leaning more and more towards the purple count. This would be wave A, wave B, wave C, and this is, I would say, the lucky path if we have gold moving towards this target and reverses here, making a strong bullish candle or bullish signals moving higher. Well, this would be a reversal on a flag. If, however, if it moves lower here and makes a bigger wave, that would be a stronger and longer correction. So we are tracking these in our weekly reports. And speaking about the GOD, this is the one that we shared, first discussed on June 14th. So far, GOD is down 3%. So these green candles, daily candles, are possibly a reversal candle, possibly a bounce, but we need to see a confirmation. So far, the weekly is tracking bearish, and if it moves a little lower, it will be a big reversal. So that's gold. Now let's move on to natural gas. Let's see how the futures opened today. Well, we had a three red candles. We have a bearish cross here, 8x20 EMA daily, and we have a big gap upward upon opening. So let's see what happens tomorrow. I think that this is a very critical move here, and considering that natural gas was greatly oversold, now we have a chance to see a green candle, and I'll talk about it just in a few moments. So on the 2-day frame, we have a bearish candle, no questions about it, and but interesting, on the 15-day frame, the candle is technically neutral, potentially bullish. The two candles were not able to overcome this green candle. Now I'm looking for a higher move, but again, nothing is confirmed here. We need to see the monthly closure, which will be next week. So this was an interesting theory yesterday I discussed. So this is UNG. We had 3 gaps up. Obviously, it moved the price down, but now we have, yesterday I discussed about the possible 3 gaps down and then another reversal in the opposite direction. So it looks like it's happened today. We have 3 gaps down, although this gap is closed technically, but still, let's see how it opens tomorrow. If it opens with a green candle and makes a bullish engulfing, well, it would be the beginning of the rally. And speaking about the wave here, so I think that this wave could be completed here. So wave 1, 2, 3, 4, 5, an impulse down, and now we would be looking for a wave up. So let's see how it forms, whether it forms a sustainable impulsive sequence in the next day or two. So far, this wave looks complete, and potentially this is an alternative wave 2 that we discussed yesterday in our report. Now let's talk about oil. This is the most interesting one. So that's we have a daily candles, daily reversal, very strong reversal on Monday, Tuesday, and today it failed to move lower, and I think that this is going to be a bounce here, because technically it's a ladder bottom, but not very strong, maybe just leading to a little bounce. On the 3-day frame, a very strong closure, bearish closure. This tiny candle, and now we have a tower top formation. On the 8-day frame, on Friday, there is a chance for closing it with a bearish candle. And the weekly and the monthly so far are tracking for a bearish closure. If we look at the Elliott Wave, this is the chart that we discussed on Friday. saying that oil is set to move down when it was 73.5, and if it wants to continue higher, it needs to stop here and move upward. However, what happened is oil dropped much lower and it formed an impulse. I think that this is not the complete impulse, so this potentially could be wave 3. Okay, so let me put this alternative count. So this would be wave 1, 2. This could be wave 3, and based on the structure of this little wave here, I think this is wave 4 of the same impulse. If it forms like this, makes a little lower, because right now I'm not seeing it enough strength for it to make a wave 2. And once we have this wave down, this would be wave 1 or A, and we would be looking for a bounce, something like this, and this would be wave 2 or B of correction, of the bigger correction, and it will be followed by wave C or 3. So in our case, I'd like to say that approximately from timing perspective, this wave might take a week or maybe even 2 weeks to develop. The question is right now is what kind of wave it's gonna be, whether it's gonna be a corrective or impulsive wave. That's all for oil, and that's all for commodities today. Now let's move on to the stock market, and let's evaluate the candles that the indices made today. So an interesting thing, so this is the daily closure, SPY, QQQ, DIA, and IWM. What I'm seeing here, that SPY and Nasdaq, they formed bullish continuation candle. This is on neck in neck candles, and on top of this, I'd like to say that Nasdaq has formed a very strong move. 50 days moving average moved through the 100 and 200 days moving average like the knife through butter. Dow Jones recovered. It at the beginning of the day, I thought it's going to be a bearish engulfing of some sort, but it ended up with an incomplete dark cloud cover, which is most likely a bullish continuation. So these three indices are bullish, closer to neutral. Russell is slightly different, so it has a bearish engulfing, and I think this is going to be a move down in the next couple of days. And if time permits, I'll try to update Russell today on a written version of it with the charts and everything. I think this is an interesting combination that requires further attention. But this is just a daily frame. If we look slightly, if we zoom out and look at the 5-day frame closure today on the futures 5-day, we can see that futures formed a very healthy continuation candles closing above the high of the previous one, and the chances for a move higher are significant for S&P 500, for Nasdaq, and for Dow Jones. For Russell, it's still in a consolidation move, so the chances for either a horizontal move or upward or even slightly down, actually, I think it's more like a consolidation at this moment, although the technical support is bullish, and I think that there is a better chance to see higher prices for Russell as well in the long term, mid-long term. Well, that's the candles perspective, and from the Elliott Wave perspective, so today S&P 500 stopped just this is futures, stopped just few points from making a new all-time high, technically keeping the red and purple counts on the table, although I think that the green has a better odds at this moment. And that's the perspective. If we look at the smaller chart, I think that this is potentially for the green count. 1, 2, 3, 4, 5. This is one perspective. However, I cannot reject the possibility that this was wave 3, this was wave 4. This is just another possibility for the green count, like alternative green. I'm just using the blue, so it's better seen. And this would be wave 1, 2, and in our case, then this wave 3 is being developed. So that's another perspective. So let's see what happens next. And so far, this is bullish. Now let's have a look at Nasdaq. Nasdaq, I think it made a very clean all-time high today. Technically greatly reducing. Okay, first of all, the red count has been invalidated here. I think yes, and for the purple one, no, it's not invalidated, so it's an impulse that has been invalidated. Potential impulse 1, 2, 3, 4, 5, and another one down. So both purple and red has been greatly reduced in their probabilities, and now the red count is on the table. Whether this is 3 or if the 3 moves higher, that's still a question. However, I think that there is a chance for slightly bigger wave 3 for Nasdaq, because typically it stretches much stronger. Well, that's the perspective, and today I prepared 3 quick updates on specials on the financial sector, on the technology sector, and also on Bitcoin. So let's start with the financial sector, XLK. So what we are seeing here is a freshly made 50 by 100 days golden cross. That's important. And the candle, from the candle perspective, XLF, did I say XLK? Yeah, it's XLF financial. At the beginning of the day, it had a chance to form a bearish engulfing. However, it ended up with a dark cloud cover only, which could be bearish, but could be also bullish, considering the momentum. The 10-day frame will be closing tomorrow, a very important one, and the 5-day frame is also on track for a bullish closure. Unless we see a very, very strong reversal tomorrow, this would be a bullish continuation. And if XLF closes above this level 51.77 tomorrow, I would consider this formation as the rising 3 methods. This what I'm talking about. So this would be a consolidation, a green candle, and another big green candle closing above this one. Well, that's the perspective for the 5-day frame tomorrow, and the monthly so far looks bullish after a bullish engulfing in May. Now let's talk about the chart. This is a kind of one of our unique chart. So this was made on July 10th, 2023, 2 years ago. The chart remains unchanged. This is the original elements, original everything. Those who followed this chart would make 52% as of today. And so far, I'm looking for a continued move higher in wave 3. Then we would be looking for wave 4 and wave 5. Well, so far, it's working. If you're interested in a smaller chart, the perspectives for the current waves, we discussed it in our XLK in our financial update a few weeks ago on the website and also discussed it in our videos. Now let's talk about the technology sector. The technology sector also closed today with a bullish candle, although it had two gaps here, which is kind of concerning. I would like to see at least one gap closure tomorrow. And this is the 50-day moving average, which is following technically the same that we've just saw for the financial one. One golden cross will be followed by another golden cross. I think in the next couple of days we will see it. So far, the 5-day closure is on track for a solid bullish candle, and the monthly frame is looking solid bullish. In 5 days, we will see what happens. And this is the chart that we started tracking a couple of weeks ago. I think that this is 1, 2, 3, 4 potential wave 1 somewhere here, so 265, 270 area. That would be the most typical target for this wave. Let's see if it moves like this. Well, so far I don't see any bearish components or bearish signals for the wave. Well, that's the perspective for the technology. And just to emphasize, if we see technology and the financial are moving in one direction and have a great potential for a rally, these two are more than 40% of the entire market. So that there is a chance for the market to follow strongly. And the final discussion of today is Bitcoin. Those who followed our call on just 3 days ago, this was June 22nd, when I said that this is at the bottom, most likely a bottom, and we would be looking for the next move towards 113, 122 with an ideal target of 117K. Well, this is what happens right now. Bitcoin made how much from our call? Well, almost 7% at this point. And I think that this wave up is being close to its end. So most likely this is going to be wave 1. Wait, let it make so this would be wave 1, 1, 2, 3, 4, 5, somewhere here. Then we might see a pullback down for wave 2, which would be followed wave 3, 4, and 5. So this might take a couple of weeks to develop the entire impulse. So let's see what happens. And now let's talk about the candles. Candles, as after our call, candle, and by the way, the call was on the candle failure to make a new lower low here, and now we were expecting a bullish engulfing. It indeed happened, and now we have a solid bullish continuation candles. 2-day frame also formed a bullish engulfing, and the weekly so far is looking for a bullish engulfing as well. So that's the perspective. This is the chart. I think it's getting close to wave to the end of the first impulse of the bottom, wave 2, and we would be looking for continuation depending on how it pulls back, what kind of wave, and the levels. We would be looking for projecting the next waves. So stay with us, follow us on multiple platforms, and check our weekly digests for Bitcoin. Now let's talk about our swing room. As of Monday's close, our swing trading room signaled cash on SPY, taking a disciplined pause. Our master trader David and his battle-tested algos continue to track the setups with surgical precision, minimizing risk, maximizing opportunities. These signals are shared daily with our subscribers only. And now let's wrap it up. So where do we stand? Volatility is still easing, short-term calm, but don't get too comfortable. Dollar might be carving out a bottom. Watch for one last shakeout. Rates could bounce from a textbook ladder bottom. TLT shows no signs of a true structural rally. A sharp reversal may be just around the corner. Flag in place. Gold is in pause mode, building a larger bearish case. Natural gas deeply oversold and primed for a bounce. Oil just fired an impulsive shot lower. A consolidation may come next, but the path points down. Equities. SP 500 and other majors closed midterm bullish. A short-term pullback could hit, especially for Russell. Nasdaq broke to a new all-time high, leaving bearish alternatives behind. In our specials, financials and industrials are marching to the beat of a 2-year-old chart that still nails it. Technology continues to show strength. And Bitcoin, if you caught our call 3 days ago, the rally is already rewarding the faithful. This is the power of charting before the crowd even blinks. If you want deeper insights, mid and long-term strategies, exclusive forecasts, swing trading setups, and special studies, don't miss our weekly digest, available to Investing Angles members only. We are offering a limited time discount for new members ending June 30th. Join at investingangles.com or reach out to us at help@investingangles.com to learn more. If you like what you see, share your likes. Share the update on other platforms and help others rise above the noise. This is Investing Angles, which are the charts before the crowd even blinks.